Angle. New economic reports are out for the UK and Germany, and it's a real tale of two economies. Joining us now is Nick Kounis. He's the chief European economist of Fortis Bank, and he joins us from Amsterdam. Nick, welcome to Bloomberg News.
Hi.
Nick, give us the latest. What do these reports tell us today?
Well, I think it's important to note that they refer to different time periods. The UK data, which were much weaker than expected, refer to the second quarter, whereas the German and overall Eurozone survey evidence refers to the beginning of the third quarter. So what we know is that the second quarter in Europe is still weak. It's still consistent with a contracting economy. But in the third quarter, most evidence coming out is suggesting that the European economy could have stabilized. So throughout, we expect actually that the recession probably ended in the third quarter of this year.
Nick, you say that the main surprise came from the service sector. Tell us about that.
Well, yes, the official GDP numbers pointed to or painted a much weaker picture of the service sector than the recent survey evidence. The survey evidence suggested actually that the sector expanded very slightly in the second quarter, certainly towards the end of the second quarter, whereas the official GDP numbers were pointing to continued sharp contraction. It could be that the official data are lagging somewhat. So it could be that the positive news towards the end of the second quarter comes through in the third quarter official service sector data.
Does the evidence that you're seeing suggest that the UK economy has emerged from this recession?
Yes, I think so. Most of the evidence that we look at, most of the more reliable monthly indicators, also that MPC members monitor, suggest that the economy has probably stabilized. It's not rebounding back very strongly, which is what you would usually expect following a deep recession, but it's certainly finding its footing, and we think that it's set to embark on a gradual recovery in the coming quarters.
Nick, also some good news out of Germany today. The business confidence index rising to a 9-month high. What are the drivers of those numbers?
Well, Germany is an export powerhouse, and it suffered more than other European countries during this recession, which partly reflected a collapse in world trade. And what we know is that the global economy is starting to revive again. And again, Germany is more sensitive to that, but this time on the upside. So Germany is now outperforming the Eurozone average. And given that we do think that the Eurozone's economic recovery will be export-led, Germany should really be in the forefront of that.
Nick, speaking of comparisons, how do both Germany and the UK compare to the U.S.?
Well, I think that the U.S. is probably going to outperform both Germany and the UK. I think maybe for slightly different reasons. I think that in terms of Germany and the Eurozone, one of the factors which will hold it back is sluggish domestic demand. The macroeconomic policy response in Europe has been slower. And we know that Eurozone economies are slower to adjust. As far as the UK is concerned, the UK has had a stimulative monetary policy, but we judge that households have still a lot of work to do in terms of repairing their balance sheets. The UK saving ratio is still at low levels, much lower than the US household saving ratio, which has certainly climbed up significantly over recent months, suggesting that they are more progressed in terms of their adjustment.
Nick Kounis, chief European economist of Fortis Bank, coming to us from Amsterdam. Nick, thanks for your time. Appreciate it.